Let's talk about silver price. We'll do a silver price update, and I'm also going to discuss with you why I think the NASDAQ, stocks like Nvidia, etc., are totally fucked, and you should be getting out of tech stocks right around about this kind of area right now. If you're watching this on the replay, use the time codes below to go to your favorite part. But geez, man, if you're watching live, you get to enjoy every single damn thing we do here at Good Morning Stackers with me, Joe Main, going out live on YouTube only today. Apparently, we're not going out live on X for some particular reason. It doesn't like me today. I think it's because I moved over to the beta version, which was such a dumb move. But what do you do? Do me a favor, though. Head over to x.com/it's Joe Main. Why would I want you to do that? Well, I'm still going to try and go live over there if possible, but also just the screen. No, you want the screen and me. Here's the reason why. Because I go live over here. So do me a favor. I am normally going live, but not going live. Give me 1 second. Again, use the time codes below. Just skip to the straight to that part. Go to silver update. We'll talk about tech stocks, etc. I'm going to have to say no go on the YouTube, so I'll just have to tell everyone, if you don't mind. Do you mind going on that journey with me? That'd be really fantastic. Let's do that together. I'm Joe Main. I've been a stacker of precious metals. Why this fucking thing won't work? I've been a stacker of precious metals since 2010, a stacker of crypto since 2013, and we'll talk about more live this morning on YouTube. I show you how to join me. Join me on now. On now. There we go. And then I do that thing. There we go. That's going to have to be a bit of a... There we go. Much better. Good to see you, my people, my wonderful, funky people. Let's head over here. Normally, I would be much more what? Organized? Yeah, it's screwed me up, but that's okay. That's what we do. Hey everyone, good to see you. Live on YouTube right now, watching Good Morning Stackers, 5,500 and something subscribers now. And we'll get all the people in. We'll wait for a few more people to come in, and I'll do some shout outs. We'll do the synchronized slip, of course. Then we'll be talking about all the stuff we need to be talking about today. Joe Main, I'm from Melbourne in Australia, stacking precious metals, stacking anything investable. And as you know, the show is sponsored by a couple of different ways. Perth Bullion Exchange, perthbullion.com.au. I could do it like this as well. No? Nope, I can't. I have to do it that way. perthbullion.com.au, mastering the markets, masteringthemarkets.com, of which you know I do work for the company now. I am an enrollments advisor. I'm doing their year-long course, so hit me up with an email, joe.main@masteringthemarkets.com, and I'll tell you all about the courses. And of course, you probably should be, and we'll talk about that too if we get some time, if you haven't been already, starting to dollar cost average into Bitcoin and some other crypto, the major ones too, because we might be at the bottom-ish kind of level. Right now, let's do some quick shout-outs, then we will get to today's stuff. Morning, Joe, says Madeline Honor. Good to see you, Madeline. Jason, good evening, stackers from the UK. Ahoy, my friend. Good to see you. Stacker from the UK here. Okay, it seems like we just have... Okay. Madeline, are you also from... Oh, well, it's morning, you said. But cool. We need a few more people on. But anyway, we'll do the usual. Hit the big red subscribe button to join the GMS family. Let's do the synchronized slurp now. There's a few people watching, which is good. Ready? You grab a tasty beverage. I grab my tasty beverage. We slurp them synchronously together wherever you are in the world. Yes, we're almost about to get to the silver update, etc. Just use the time codes. Ready? 3, 2, 1. Slurp it. A light slurp today because some people are like, I fucking hate that slurp. Gonna brush my teeth and listen. Cool. You should always brush your teeth after a meal. Hey, howdy, hey, says Dennis McManus. I love that username. It's so good. All right, let's go to a silver price update. Then we'll be talking decently about tech stocks and how they're absolutely cooked, my friends. Here is silver on the 4-hour time frame, priced in USD, $83.36. So last week on Friday, I shared on socials, and then on Monday, yesterday, I shared with the YouTube subscribers, even though I told you guys via a YouTube community post but I didn't make a video over the weekend. But I said, I think, probably, hopefully, bought the bottom of silver here around this general level right here. After we had that big spike on the 4 hour, technically I was talking about the 1 hour, that we'd gotten through this zone here, but then when we zoom out and look at the 4 hour, that shows it even better. And props to, once again, Jamie Bell from Mastering the Markets, who's one of the head educators over there, for pointing this out, and was even better. Huge support, and look at that big wick down. Now, most of you probably didn't catch that wick. I did get a couple of comments saying, oh, I got it, 64, 65, 66. Fantastic, good on you. I didn't. But then what I needed to see was a break of resistance, and then that resistance then acting as support. And we did that on the 1 hour. So we broke through here. Now, technically, I was talking about this level it was roughly kind of this support level here, which was lining up there. So broke through there, bounced off support, and then I got in this general area in here. Right now, so far, so good. Number go up, number go down, however. So what we need now to look at is, are we coming to a point where we can expect some kind of pullback from here? My feeling, based on the technical analysis, and not just based on feeling, but based on the technical analysis, is yes, I do think we now see a healthy retrace from here, and then I'll show you what we really need to see. Okay, or I'll also show you what we don't want to see. But let me tell you the reason why, and let me just go back here. So looking great, okay. That looks like to be potentially an ABC correction done. So a 3-wave move down, done, and it's been a really quick move too, okay. However, what we're coming up to now, and the short answer is you should be buying anyway. You're buying for the longer term, so it doesn't really matter, okay. But if you're like, oh, I like to trade this stuff, cool. What we had been talking about, and the reason why it's been so bullish, is because we had bullish divergence, and that's where, I don't know why that's doing that. That's where you had I fucking hate this thing. That's where you had a lower low on the price, okay? There. You take it from the body closes and not the wicks, but that's close enough for jazz. Lower low, higher low on the relative strength index, higher low on the volume as well. So what was happening there was divergence. The price and the indicators were not moving in the same direction, okay? They weren't doing the same thing. That's divergence, not convergence, obviously. And so that's good. So we have figured that we might be at a bottom around about here, and it does look that way. Okay. Now, however, excuse me, what it's showing now is something called hidden bearish divergence. Okay. Now this is where, in particular, and it's actually doing it on both the volume and, well, actually the volume doesn't show hidden signs. So don't worry about the volume for a second. But on the relative strength index, now what you have is a lower low, or potential lower low. It's only potential at this stage because we haven't changed market structure, and a higher low on the relative strength index. It's called hidden bearish divergence. And look, again, number go up, number go down. So let's unpack it a little bit more. Do we notice any particular signs of weakness on the shorter term timeframes? And as you can see on the 1 hour time frame, yes, we do. So right here between this peak and this peak, you've got regular bearish divergence in here. Let me get rid of all this junk. Well, actually, I'll just hide it for you because it's getting a little bit liney. Cool. I'll keep that. So yeah, little bit of regular bullish divergence potential coming in. What would say that is happening? Well, a change of market structure, at least on the 4 hour time frame, and that would be if you start closing through there. Okay, then, well, it's actually not 100%, but if you start closing through there, you'd be getting a lower low, and then if you do that. Okay, so my feeling, or my bias, is actually probably to the downside over the next 24 to 48 hours. And what a great opportunity would be for you to pick up some more. Okay, I'll show you on the halfer. Yeah, how can you just see how it's just kind of, momentum is getting a little bit lost at the moment. And again, because number go up, number go down. And what you have here is a 5-wave move on the half an hour time frame. Now, I know I'm getting like really into the minutia here, but again, talking about this stuff informs you over the larger time frames as well. So this is the stuff that you would be looking out for on the larger time frames, on the weekly, on the monthly, on the quarterly as well. All this stuff plays out within the 1 minute to the 1 year to longer. Okay, so you've had a 5-wave move, and I've been learning about Elliott wave, this unit of the Mastering the Markets course. I started last week learning the basics, and they talk about 5-wave moves. And then after a 5-wave move, you tend to have a correction. Okay, so I pretty much think it's this 1, 2, 3, 4, 5. And generally what you get between the wave 3 move and the wave 5 move, to know that the momentum is getting lost, is you get that bearish divergence off of that. And that's what we're seeing. So it looks like a classic 5-wave move on the half-an-hour time frame with that hidden bearish divergence on the 4-hour time frame. So lower low, high low on the RSI. I'm betting that we get some kind of pullback from here. Okay, and that would be a great opportunity for you. So you should be rejoicing, in my humble non-financial advice opinion. Speaking of non-financial advice opinions, I do offer non-financial advice personal strategy sessions for your investment or anything else. I talk about health and wellness as well. So I'll put a link somewhere below to that. So let's now go, okay, if we are going to retrace from here, doesn't mean we 100% will, but if we do, where can we retrace to? So you take the bottom of there, you take it assuming that this is the top. Where might we retrace to? And very simply, you can get anywhere into this normal zag zone. This normal area here would be very, very normal. And, okay, let me get rid of this. Again, isn't it amazing how it just all happens to line up quite well with Fibonacci, okay? You can find these highs and lows and matching them up with Fibonacci, because what's the very bottom end of the zag zone in which you would want to go, which you would say, yeah, no lower than that, please. Yeah, because retracing 1/3 of the move, okay, sure, and it's roughly 1/3, okay. 1/3 to 2/3 of a move, it's actually quite healthy. Anything below about 2/3, you start worrying. Now, what is that level? Oh, gee, look at that right there. Isn't that amazing how that works? So yeah, no lower than. So we could go anywhere down to, I don't think we do, but we could go anywhere down to that $71 mark, which would be right back at that support. So there, as long as you don't break through here. If you break through here, I will probably sell out of my short-term position. This is just some paper silver that I have, and physically backed paper silver, and then I might start considering, okay, are we expecting some lower prices? Cool. But anywhere between there and here, no problem. Great. It'd be really bullish if you bounce off that, say, $76 level. Okay, it'd be uber bullish. And see how that might double bottom. Uber bullish is bouncing off there and then heading through. That's cracker. That's real good. That's very strong support. Kind of neutral in that area. That's 73.50. That's weak support, but it is still support. No lower than there. Otherwise, I'd start getting concerned for lower prices coming. So that's what I'm expecting. Lower prices maybe in the next 24, 48 hours. Could I be wrong? Yes. Could it sail to the moon from here? Yes, of course. Over the long term, you're looking absolutely fantastic anyway, so you don't really need to worry about this kind of minutia. But again, it does inform you for the longer time frames. Why? Once again, just for the uninitiated, what happens on the smaller time frames happens on the larger time frames. Okay, you had the 1. Come on, Joe. 1. Oh, for fuck's sake. There we go. The 1, 2, 3, 4, 5. Okay, big down. This is up to 1980. You've got the 1, 2, 3, 4, 5, 2011, and the big move down. Now you've got 1, 2, 3. We're getting the 4, we're getting the 5. That takes us into the 2030, 2032 kind of area. And as you know, so much more to go with silver. We're just in a little bit of a pullback-ish area kind of now, maybe from now to, say, September, October, that kind of area, something like that. Number can still go up and down in that time, but sort of faffing around this general area. Then we'll have the pullback. Then we'll go hog wild, crazy crazy, crazy Broadway style move in silver, and you're going to be very, very happy. So as I've been saying, this is the time right now. If you haven't gotten into silver yet, or if you're wanting to get in at a range before it goes hog wild again, between now and about, and I say now and September-ish, okay, probably anywhere up to out to. So it could be tomorrow, could be, probably not. But, you know, the next few months, anywhere out to sort of September, October of this year is your window of time, okay? Somewhere in here, then it's going to find its bottom, and then it's going to go mental, okay? So that's your hot tip from me, but I am expecting lower prices next 24, 48 hours. Cool, watch out for that. That's the silver price update. Let's, I'll quickly check gold for you, and we'll do some other stuff too. And then we'll do some more shout outs. Yeah, gold, interesting. Hey, gold is at 5,060 US dollars. Seems to be holding up a little bit more nicely, and we'll take a look at the gold to silver ratio as well. What we have yet to do, and indicators, okay, same thing. We're getting some potential, only potential, hidden bearish divergence on gold under major resistance. Okay, so that's the 0.618 of that zag zone that we talk about. Okay, it's just in the opposite direction. So when you have a big move down, you can retrace up anywhere up into that zone here. Okay, and we've found it exactly. That's previous area of major buying as well. Cool, so that's there. Isn't that interesting how it all lines up? Cool. Now we're finding, what's that? Technically, it's a lower high, but you can call it an equal high if you want, and a rise, a higher high in the relative strength index, hidden bearish divergence. And if we go to the 1 hour, you are noticing once again, yes, some momentum loss on the 1 hour, where you have a higher high, lower high on the relative strength index. The volume is, volume's actually not too bad, so maybe that's its saving grace. But no, I'm expecting lower in gold, at least in the next 24 hours, lower from here, lower in silver as well. And with that, you wouldn't want to, well, I mean, you don't want that to happen, okay? You don't want to break back through 4,700, because what would that be? Double top as such. Well, not double top because that's top up there, but yeah, you wouldn't want that kind of thing, that kind of M pattern. Not good. Then you'd be saying probably lower prices from there. I'm not saying that's happening. I'm just saying watch out for that. And the area you'd want to watch out for is between here and here. Am I on log? I am on log. Okay, whatever. Anywhere in, oh, yeah, kind of matches up really well. Okay, yeah, so anywhere down to, yeah, 4,920 to that sort of 4,800 kind of area. Don't want to go lower than that 4,800 area, right about there, please and thanks. Very bullish would be, obviously, bouncing off there or bouncing off that 49.20 kind of area. Very bullish. And then once you break through there, oh, that's really good. Okay, you break through there, then I would probably say potential new all-time high. Okay, potential new all-time high coming. But what we do from there remains to be seen. Again, as we talked about with silver, it could be just faking you out. It's called the expanded flat. Fakes you out here, heads back down, or fakes you out and just ranges for a bit before then we go again. Hog wild for gold, hog wild for silver, etc. We're just in the chop, and what you don't want to do is get lost in that chop. You shouldn't be trading here. Just dollar cost average into that September kind of time frame now between then, and you're looking so good for gold. Cool. That's all of that. I'll go to some shout outs, and we'll talk about how tech stocks are totally effed and cooked, and the market will open soon as well. Cool. Let's get to some more shout outs. We'll get to some more comments. You're watching Good Morning Stackers. Lots of people watching. Sorry that I can't go live on X today. It's really annoying. Not yet, I'm dry. Okay. Good morning, Joe. Good morning, Silent Stacker. Good morning, Van. Good to see you, my friend. Morning, Joe. Morning, Stackers. Hi, everyone, says Knackers O'Reilly. Good evening, all. Jake from the UK. Good to see you, my friend, who's an amazing member of the Silver Investor Club from only $1 per month. silver specials, giveaways, much more. It's better to be a premium member though. I'll put a link somewhere because then you get a monthly giveaway, weekly specials, all that. G'day all says AU Zeke Geek. Zeke Geek. I don't know the Zeke part. I get the AU part, Australia or gold, but what's Zeke? I know geek, but what's Zeke? Oh, you're just your name. Okay, got it. Cool. All right, I think it's time to talk about it. And then the market will open soon. Yeah, let's get to it. Cool. I'll go back to here. What an interesting morning it's been. Let's talk about how tech stocks are totally cooked. Over the longer term, are they going to go down and completely tank from here? Possibly not. But it's not looking good around about here. I would suggest that if you're watching this right now and you already know it, okay, maybe share this with your friends and family. I would suggest, hello friends and family, that being in tech stocks right now, we're talking about Nvidia or Tesla, or I'm very bullish on Tesla long term, bullish on Nvidia long term and all those. But being in tech stocks right now is not the place to be. They are looking pretty cooked over the slightly midterm to longer term, but I'll show you why. Okay, now let me go back to a post that I did on X, and I'll show you over here. Now let me find it, and we'll go through it, and I'll explain why. Well, I said here, get the F out of tech stocks, but let me explain the reason why. So tech stocks in general, like your individuals like Nvidia, etc., they're all tied. Of course, they're part of the NASDAQ. The NASDAQ is the big basket of tech stocks. Okay, so this is why, and I'm just going to read this, go through this, and then I'll explain in my charts and whatnot. Okay, the NASDAQ is looking shaky AF. Shaky as all get go here. Now, we have seen a little bit of a rise in the price, but I've got to explain it to you. Looking shaky AF right now. Okay, let's explain why. On the weekly time frame, now we haven't done this yet, but it doesn't mean we can't. On the weekly time frame, if the NASDAQ crosses below 23,850, you have a double top playing out, and down further she will go. Okay, you have a potential double top here, and if it crosses through there, that would be the death knell, I would say, for a good period of time. At the moment, you can see here that is, and that's so far where we still are, there's an equal high and there's a lower high on the relative strength index. Okay, now that doesn't spell doom. It's only if you have a bearish change of market structure, and on the weekly, that's if you start doing that. That wouldn't be good. Okay, now technically it's not a full change of market structure, and I'll explain that in a second, but it's not looking great. Then I think the NASDAQ will be retracing down into these kind of levels, bare minimum. I'll unpack this on the live chart for you. And worst, I think it'll be retracing a very much larger move. Okay, right there. And let's see, given the NASDAQ looks like a 5-wave move is completing soon, if not here, I'm guessing it's going to be one of the larger retracements. Again, I'll explain that. Personally, I think, and I've given my target of, I think around $7,000 to $8,000 is the lowest that we can go for the NASDAQ over the longer term. That's about a 75% drop from here. Let me unpack it and explain what's going on. So that would mean that if the NASDAQ is dropping, that means everything else in your tech stock area, like Nvidia, all your tech stocks, your Tesla, all that will be taking a beating. Okay, now we have seen, and I've got to zoom out for you. I'm going to go to I'll go to here, and I'll get rid of a couple of things. That one? No, okay, I'll keep that. No, I definitely want that. And I want that for the moment. So here's where we are in, I think, NASDAQ. And this is where we are in the phases of the market. Okay, markets move in 3 main phases. I'm going to go back to here just so we can, there we go, a little bit better. So you can see all my advertisements as well. Markets move in 3 main phases, and we've talked about it's an accumulation phase, a public participation phase, and an excess phase, and that's where every man and his dog, it's the flavor of the years. Okay, this is the quarterly time frame. Okay, and after and we don't know quite yet if this is the top, but if it is, after a 5-wave move, after an excess phase, you get a longer, drawn out downward movement correction in which you don't want to be holding the bag at the top of that. Now, for example, if you're in the start of a phase, like the accumulation phase, okay, look, if you're holding for a bit and you're happy to hold, great, holding the bag. Maybe you bought here at 2000 back in 2007. The GFC happened. About a year's time, roughly, you were down on your position, but you're like, wow, the markets go up and markets go down. Okay, and then if you held, great, cool, no problem. You had a bit of a move down, and then you had the public participation phase from 2008. This was before the GFC. 2007? No, 2008. Then the GFC happened, then the big spring back, okay? That took you all the way up to here, right? October of 2021 to like 16,000, right? Now, even people who are buying here, 16,000, right? You've got 1, 2, 3, 4 months, 4 quarters, so that's about a year, okay? No problem. Markets always go up, don't they? Okay, fantastic. Now you're here. If it starts turning around here, naturally a lot of people are going to go, buy the dip, buy the dip, buy the dip. Here's what they will not understand is after you go through this massive accumulation public participation excess phase, it's not just correcting a smaller move, it's correcting the entire move, okay? And this can take you much, much lower, and it can also be drawn out much, much longer in time. So I'll pop this in, and this is the kind of move that, and I'll go into the shorter term time frame to see if we are towards the top, which I believe we are, okay? This is the kind of window that we're talking about, okay? Let me show you on that. Is that going to be the one? I'll just draw it in again. So in here is where I think we're going to, okay, eventually. So we're going to head somewhere down into this kind of area here. That's anywhere. Now, this is the first option, and this is, I would call this probably the second worst option, okay? There's a worse option, which I'll talk about in a second, was that kind of $7,000 to $8,000 kind of dollar time frame. But the problem is you do not want to be holding the bag anywhere near the top of an excess phase. I'll go into the shorter term time frame and say, could we punch up a little bit more from here? Possibly, but I've got to show you some other things. What I do think occurs very, very soon, and many people are talking about 2026 being the time. Is it now? Is it September, October? Does it coincide with the seasons, the silver seasonality, and where silver in sort of September, October starts heading up, and then does it tick over there? I don't know. We have a little bit more to go. It doesn't really matter in that kind of window, because you're really at the top end of the excess phase, and I'll explain why you're seem to be at the real top end. But I'm expecting this kind of thing, okay? And many people are expecting the same. So it's not just going to be this, okay? That was like about a year. This here was about a year. We're not talking a year. We're talking multiple, okay? We're talking a very long time, okay? This is taking you into 5 years, possibly 10 years, possibly longer of drawn out. So you do not want to be holding the bag at the top of the excess phase. Now, the accumulation, public participation, and excess phase happens to, obviously, very simply when you see it, go in confluence with the 5-wave moves that we talked about before. Remember how we did that on silver on that 30-minute time frame, and then I showed you on the longer time frame, markets move in 5 ways, 3 phases, and 5 waves within those. So let me show you that. Nope, that's the correction phase. Let me show you that. This is what I think we're doing at the moment, and many people think we're in the same kind of area. That was your accumulation, wave 1. That's your wave 2 down. That's your wave 3 public participation. That's your wave 4 move. Now we're at the wave 5, and after the wave 5, you get that correction. Now, I'm going to be talking about this in just a second. We'll get to there. Okay, so this is where I think we are towards the top end of tech stocks, and you should be, in my opinion, probably getting the F out of them at the moment if you are in them right now. We can take a look at something like Nvidia, for example, one of the largest ones, and I can show you how that very similar pattern is playing out. Okay, actually, I'll show you that No, I'll come back. No, I'll show you that now. Let's go to NVIDIA and I'll show you exactly why that's playing out in a very similar way. So here's NVIDIA when it decides to come up for me. There we go. Very similar kind of thing. Can you see that? Now, accumulation, and I'll do this on the, no, I'll do it on the linear scale. Very similar fashion. We have the accumulation. There's your wave 1. Let's do this one, impulse wave. There we go. Roughly 1, 2, where was it? It was kind of 3, 4, 5 is what I think we're playing at. I know that looks a little bit, I'll go to the maybe to the monthly and that can see it a little bit better. Very similar thing that I think is playing out. Okay, what we also talked about with these moves is what happens is you get bearish divergence between the public participation in the excess phase between the third wave and the fifth wave, the top of. Okay, so from here to here, what you're noticing pretty darn clearly is that high. I know it's a little bit jumbled right now, particularly if you're watching this on a small screen, but you've got the lower high on the relative strength index as well. So NVIDIA is showing only potential signs, but decently potential signs at the moment that it is topping out. It's also as part of the Nasdaq. I think it's the largest NVIDIA, and it's a large percentage of the Nasdaq market cap, if that makes sense. So that's why I think NVIDIA is also effed. What we need to see in order to say that it isn't, it's not going to at least continue up for a bit, is you want to see a change of market structure. That's where you make a lower high here, then you make a lower low, and then we can say, okay, yeah, that's really cooked. Cool. So let me go back to the NASDAQ, and I'll show you why I think we're at a pretty darn high point as well. So then I'll take some trend-based Fibonacci, and let me get rid of a bunch of this for you just so you can see it much, much better. And I'll get rid of that. Will I get rid of the excess phase? Sure. Let me know in the comments as well what you think about all this. Do you think I'm correct? Do you think I'm absolutely mad? Now, my subscribers are very much precious metals focused, etc. So I think you already know. You probably will align with me. But in case anyone's watching who's like, this dude's absolutely crazy, tech stocks are going through the roof from here, I'm happy to hear your reasons why. For sure. So now let's do some trend-based Fibonacci extension stuff. And I'll take it on the logarithmic just to show you where we are. So let's go here and a trend-based Fibonacci. I'm going to take it from what I believe to be the start of wave 1 to what I believe to be the top of wave 3, roughly. And then I take it down to the bottom of wave 4. Now that's just on the logarithmic. Now I'm going to show you here. And before I do it, I'm going to tell you what the general rule is for extensions with Elliott wave. This is what I've been learning in Mastering the Markets. I learned this just this week. Okay, the 5-wave moves. I was already kind of aware about 5-wave moves, etc. I've already imbibed a lot of stuff just from being part of Mastering the Markets Academy, etc. But the trend-based Fibonacci, it tends to like, and let me explain it. It tends to like the 0.618 or the 1 extension as a top of the 5-wave move. Okay, let me explain that again. You've got the 1, 2, 3, 4, right? Now, this 5th wave move tends to like the 0.618 or the 0.1. Now, you're looking at this going, well, that's nowhere near that. I'm looking at this on the logarithmic scale. Let me show you on the linear scale, which is what most people are going to be using. Where are we finding ourselves around about now? We shot through the 618, and where are we finding a decent area of resistance? Now, I don't think I have this drawn in absolutely perfectly. It's probably close enough, but you can see pretty darn clearly that we are right at major area of resistance here at the 1 extension. It does happen. I mean, it certainly does happen. It's less common, but it does happen that you can extend to the 1.618 in equities, okay, as a 5th wave move. But in general, it's usually here. We sailed through there. We're now at the 1. So combining all of that, Okay, we're at the 1 extension. We're definitely in the excess phase. Absolutely, I have no doubt about that. We have absolute bearish divergence. Again, higher high, lower high on the relative strength index. Again, nothing's confirmed just yet, but it's all the signals are showing we're getting towards the top. Now, what could happen from here, and this is why I think you should be buying silver as well. What could happen from here is we have a potential little fake out. Okay, you could in the next, so this is the monthly time frame, you could in the next couple of months, let me be very clear, you could have a bit more of a pump in the NASDAQ. Now imagine if it does a nice little fake out right above here, goes right to the very apex, right at the that one around about your 26,400, 26,500, and then on the smaller time frame, you get some bearish divergence, which you still might be playing out here on the relative strength index. Cool. And then it does that. And then if it changes market structure, that's when you'll know on the monthly time frame it's absolutely cooked. You would want to go into the weekly to see, to try and pick the top more. Okay. And as I explained before, you really shouldn't be trying to pick the top here. From around here, it's looking really cooked, okay? Do you want to wait? Oh, I think the NASDAQ is going to go, oh, that thing that Joe said might happen. I might get another 4%. Or it'll be higher with specific stocks that you're in. Are you going to worry about holding your tech stocks for another 10, 15%, where I have absolutely proven to you, in my opinion, you're at the top end, okay? You're getting really cooked here, okay? No, but technically you could go higher. What you want to see on the daily for sure, daily, weekly, monthly, is a change of market structure. It is where you are making successive lower highs and lower lows. What you've actually been doing here is you haven't changed market structure yet. You came up to here, so you made a higher low, you made a lower high. If we had have done the following and then made a lower low, so lower high, lower low, that would have been a change of market structure, and then you would have said, okay, that's the top. NASDAQ is cooked. Now we're going in that much, much longer protracted correction, right? It didn't do that, okay? It technically made a higher low. Here, lower high, higher low, higher high, lower low, but then we made a higher high. So technically we haven't broken market structure. It's chopping you out. Okay, right about here. This could be called distribution. It's also known as the Bart Simpson pattern as well. If you look at Bart Simpson's hair, it does this thing like that. That's quite possibly like classic distribution. And what do I mean by distribution? It means that at these levels, do you think the large institutions aren't seeing? Do you think they are not aware of the phases of the market? Do you think they're not aware of the extensions and Fibonacci and all that? Those guys are the absolute professionals. They've got their quants. If you know that quote, right? He's my quant, right? They're really, really smart people. You think they're not seeing the same things that just me is seeing as well? Yes, they are. So what the large institutions do is, because they have so much money that they have to divest, they can't just hit the market sell button, because you would tank the entire market. NASDAQ would go to zero and the world would blow up. Okay, so they have to get out very, very slowly. So they're probably noticing from around about October last year, oh, we're looking pretty cooked. Time to start scaling out. So that's what this is. Little bit up, little bit down. They're scaling out little bits at a time. Okay, and that's what I think is happening. So it's not until you get a change of market structure, and I will be watching very much so on the daily. If it happens on the daily, I will be informing all of you via a social media post or a video. Okay, so here's where we are now. We made a lower high. If we do the following, we made a lower low. If we do the following, lower high, and that, if we cross through there, get the F out. Okay, I think you should be getting out now. Don't wait for another, again, 5-10% in your stocks. You should be getting into something which is highly undervalued. I think that would be silver. We'll take a look at that in just a second, but that's your kicker. Now, what could we do? Okay, we could do this. Okay, we could range for ages, do this kind of freak you out a little bit, but then we made a higher high first, so technically it's not a break of market structure. We could come up to here, okay, and then, but it's not until you get this thing, that's your get out, okay, or technically that would be lower, no, actually that would be lower highs, lower lows, cool. We are looking quite cooked in my humble non-financial advice opinion. We are at the top end roughly, okay? Creep a little bit higher, sure, but not for much longer, people. And then you are going to get that on the monthly, but you should be watching it on the monthly, particularly watching it on the weekly, or subscribe to me and I'll tell you on the daily if we're getting that change of market structure. But just get out now, okay, if you're in my opinion. The question then becomes, well, do I hold cash and wait 5-10 years for the NASDAQ to be, on sale again at a really good discount? No, you should be rotating it into something that is highly undervalued. Oh, gee, Joe, what could that be? Buy silver, people. Let me go to the NASDAQ. I'm going to go to NASDAQ versus silver, then silver versus NASDAQ. Okay. So this is sort of pretty broad. And I'll take you out to here. Now, once again, this is the NASDAQ versus silver, and then I'll show you in the inverse, okay? So actually, what you would have been wanting to do, if you had have been watching the NASDAQ to silver ratio, you actually would have gotten out of the NASDAQ versus silver back here. And that was actually back in July of last year, where silver has been massively outperforming. So as this is going down, the NASDAQ is dying versus silver. That was actually where you got your change of market structure, okay, where you see it very clearly. Look at this. Momentum being lost all the way from 2015. You're seeing higher highs. The NASDAQ was killing it, okay, totally beating it, but the momentum was being lost. And right here, there, that was your big signal there, okay, and that was your get out clause. That was your get out right there to swap your NASDAQ for physical silver or, silver ETF, something like that, which tracks the physical. That was it there. Cool. But not all is lost. Let me show you the other way around, and we'll do silver versus the NASDAQ, and we'll show you how much longer we have to go. So here is silver versus the NASDAQ. So that's the inverse. Okay. Now, bear in mind, we could for the next month, so next few months, the next 6 months, potentially even the next, maybe roughly the next 6 months. I think that would take it into that kind of, again, that September, October kind of time frame. We could be seeing, again, the NASDAQ versus silver possibly have a bit of a dip here. Okay, but again, this could be a perfect opportunity for you to be loading up on silver, as we showed you in the normal, the regular silver price. Okay, so silver's been massively outperforming the NASDAQ, but what it's not going to do is just turn around here and just start tanking and then break down through here, and it's just NASDAQ central. Like, it's tech stocks. No, that's not how markets work. You can see here very clearly we have massive bullish divergence. Okay, this was a bottom. That there is a bottom in the silver to NASDAQ. Okay, silver to tech stocks. Then we broke market structure. That's when I showed you on the inverse. Okay, then we've had a massive move. What goes up must come down. So now let's look at where we could potentially retrace to. But what is this? That's the wave. This might be roughly the wave 1. Then we get the wave 2, then we get the wave 3, the wave 4, the wave 5, just like we talked about before. You are in my humble opinion, the very beginnings of, and I'll do it that way so you can see a little bit better. You're in the very beginnings of the accumulation phase of silver versus tech stocks. Now, let me say again, I'm so ultra bullish on Tesla. I'm ultra bullish over the long term on Nvidia and the chips and all that kind of stuff. Tesla in particular, I've said a million times before, there will come a time where my silver will get all swapped for a bunch of Tesla and whatever tech stocks are, popular at the time. But it's not right now because you are absolutely in. This is accumulation from around, call it wherever you want, but from like here-ish, this could be it, the accumulation phase. And then call that accumulation. I think we have a possible pullback here, and then we're going into public participation, the excess phase, just like I showed you with the other ones. And this actually really could be, and this could be a mini accumulation of a larger accumulation as well. So we're just in the very beginnings. All I would just say is you've got roughly 6 months, anywhere up to that September, October time, to really get your positions in silver. Gold as well, of course, the general commodities. And if someone was saying to me, Joe, I want to absolutely time the market perfectly because I just have that kind of mentality, what's a low that I should be looking out for in the NASDAQ to silver? Because I only want to swap it when it's at the best possible time. I will show you. Anywhere between, what's that, 1, 2, 3? I'll probably say anywhere between, I'll take it from here. Anywhere in this kind of area. And what did we do on the weekly? We actually, isn't that interesting? Look at that, right at the bottom right there. But anywhere in this general zone right here, you're looking good. So it's around about now. Okay, we've had a move off there. Okay, so anywhere in this zone would be a good opportunity to swap your NASDAQ for silver, because I think over the longer term, we are going to be looking for, you can head back down again, sure, but we'll break eventually through, and then it's going to massively outperform tech stocks. Cool. That's why you should get the F out of tech stocks, in my opinion. That's why you should rotate into something like silver or something like gold. Do whatever's good for you, but commodities versus the general stock market looking much, much better. Cool. Hopefully I explained that. Do we have more comments? Do I have some chart requests? We'll take a look at the market, which has just opened for about 18 minutes. We'll see what the market has done today as well. Yeah, snackers, we might have to talk about that. Looks like crypto is holding. Wonder if it will dump anymore. We could be at a potential low here. I would suggest that now dollar cost averaging into Bitcoin from here is a very good risk to reward. Very good over the longer term. Okay, you can do that via Stormrake, stormrake.com, your full service cryptocurrency brokerage. I put links to places where you get 2% brokerage fees instead of 3%, 33% discount. Maybe I'll talk about them later. Thank you, Jake. Silver Investor Club is amazing. Great community. I appreciate it. Let's see. Sorry to be a bit out of tech topic. In terms of oil stock, can you look at BTL? Beetaloo. I've heard of Beetaloo. They have an upcoming gas project. I'll take a look at BTL. No problem. Let me just get to, you need an engineer. Is this live now? It should still be live. It is live now. Yes. Timothy Bender, I do need an engineer because it wasn't going live on X and it didn't go live on Facebook for me. I downloaded the beta version of this program that I use. It's called Ecamm Live. Sounds dirty, doesn't it? Like Ecamm Girl. It's called Ecamm Live. It's for Mac. And I downloaded the beta version so I can potentially stream portrait style on Instagram, but it's just screwed me over a bit. Can you look at XOM or XLE? Looking like where the energy kind of plays. Yeah, can do that. Sure. I'll take a look at XLE first, and then I'll go to BTL because XLE is your larger thing. So I've got some time. Sure, let's do that. XLE. Oh, sorry, I just want to quickly, if you don't mind, can I just check the market to see what we've done on opening of the market? Let's see where we are with silver and everything else very quickly. Are we getting that pullback? There you go. All right. Cool. So silver has opened the day a little bit lower. We're down 3%. Okay, so that's why I do think we still get, so it's that hidden bearish divergence. We are going to come into that area that I said we are. You won't get the bearish change of market structure until you sort of either break through there or you do the following, which is that, and then you'll say, yeah, okay, then we'll come into this general kind of area in here, and you don't want to go any lower than that there. Don't go any lower than there, and we're cool. But yeah, I'm expecting a pullback. So it looks like it is pulling back like I expected it to. That's silver and just quickly then, what's a small amount of my stuff done? What are we looking at? BHP, which I'm in, is up. Bannerman Energy, oh yes please, that's up. Oh, looks like uranium is having a nice bid today. Oh, that's headed down. Okay. Oil, oh nice. WDS, which is, that's up 1% today. Excellent. YAL, which is coal, that's up 1% today. It looks like though uranium's doing really well. That's the New York Stock Exchange. Yeah, 5% up for uranium today. So we could be at the bottom of uranium. The SQQQ, let's see where we are. Oh, okay. So what this is, just so you know, the SQQQ is an inverse to the NASDAQ. So you remember how we were just speaking about the NASDAQ? This is an inverse to that. This is a way that I don't suggest many people do this at all. But if you do believe and you're spotting the signs of the NASDAQ ticking over, you're like, well, I don't want to short it. Shorting it means you're betting it's going down, but you have to use margin. You have to borrow money. You can get really caught out really bad. So I don't suggest doing that. But you can buy a stock such as the SQQQ, and this just goes in the opposite direction, and it's leveraged. I think it's 2 or 3 times to it. Okay, be very careful. Okay, but I have a position in SQQ right now. I hawked it on the 1 minute time frame because I'm a total freaking. Did I do it on the 1 minute or the 5 minute? No, I think I did it on the 1 minute time frame. I saw it broke market structure on the 1 minute and I took it. So far it's up, but yeah, we'll see. We'll see, but I'm going to hold this position until it breaks. My stop loss is here at about 67 cents, 65 cents. Sorry, $67.65. And if it continues up, well, as the NASDAQ is going down, my portfolio is going up, or at least that portion of it. What else? S32, South 32, which I have in my super, is also up for a couple of percent today. That's pretty much it. Yeah, cool. Let's take a look at XLE. So this is the basket of energy stocks, okay, ETF. Cool, you can buy this directly. Oof, it's looking really, 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 really good. That's kind of all I have to say about that. So that's, this is the expanded flat thing. So now did I draw this in because David Bird drew it in, or did I see it myself? I don't know. It's probably because of David, head of Mastering the Markets, and you all know David Bird. I'm currently learning directly from him as Mastering the Markets. He's one of my educators in my group at the year-long course that I'm doing. But this is the expanded flat thing, right? So this is where, back here, this is ultra. I cannot tell you how ultra bullish energy is right now, particularly United States energy stocks. Very ultra bullish right now because this is that expanded flat. Okay, that's where you take out the high, freaks everyone out. Take out the low. Well, so everyone goes, we're onwards and upwards, and then it heads back down and it grabs everyone's stop losses. Then it heads down into here. People are completely despondent. It's all over. I'm depressed. And then it goes, haha, thank you on that side, and starts heading back up. We've just broken out of there. That's fucking bullish. Okay? Really, 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 really bullish. I would hesitate to say, I would not say, wait for a pullback. On the quarterly time frame, now, could you get a pullback from here? Sure. On the daily, yeah, look, what goes up must come down. Maybe on the daily time frame, you can say, oh, yeah, we might get a pullback here, back to that support line. And then I'm going to scoop it up and then by the absolute bottom, you could say here, look, as we've been moving up through that previous resistance, it's been going up on sort of lowering RSI. You could also say, will it show me the volume? The volume, though, however, looking really tight. Okay, you could say on the 1 hour, yeah, look, well, potential bearish divergence here. So, yeah, you might nab a bargain and it heads back down. But if you're buying for the longer term, God, you really wouldn't be trying to time it perfectly. You could get a little wick here. And you can buy this particular XLE specifically on the New York Stock Exchange, right? So you can buy this actual one, okay? That is beautiful. What doesn't happen is the following. You don't go through this accumulation range since whatever that is, since 2008. You don't go through an accumulation range since 2008, nearly 20 years. Break out and then go, oh yeah, we just make a little high, just a little high, and then just back in. It's not what happens. You are now in a massive public participation phase for energy. Okay, so like we talked about before, you could call this, if you wanted, the massive accumulation range. Cool. So bullish on energy, and some people think potentially bullish over commodities and not commodities, over the precious metals, okay, gold and silver, etc. So I still think you should hold silver for sure, but geez, look out for energy at the moment too. So that's your, what's that? That's your 1, that's your 2. Now you're in public participation. Then we get that, and then we get that, and then that will be a mini 5-wave move, or the longer 5-wave move. This is probably accumulation. You're probably in public participation now at some point. I don't know. Ignore all this stuff. But then you've got excess phase to go into 2030 and all that. So you've got a long ways to go for energy. Okay? Long ways. And you're in that beginning phase of the public participation phase. Cool. So that was XLE. And then from there, well, then you would go, okay, well, if that's the case, then I want to look at individual energy stocks, and I'll take a look at BTL. This is Beetaloo. This is on the Australian Stock Exchange. I think it's a very small cap. Yeah, real small cap here. I'm not saying you should buy this, but someone's asked for it. It's $300 million, so very small cap. Okay, but someone asked for it, much more choppy. Okay, and you can't guarantee, you'll do any good with an individual stock. You're taking more risk, but potential more reward. As far as I can tell, this might be playing out some kind of... I've just started learning about it, so I'm not going to say 100% what it could be, but it might be some kind of diagonal kind of Elliott wave thing. But I don't want to talk about that because I'm not an expert on it. But look, it's just ranging at the moment. What is it? Beetaloo Energy. Exploration company. Okay, it's exploration. Okay, so it's not producing. So it still has yet to find stuff, I presume. It's focused on onshore long life oil and gas operations. Has it struck anything yet? Is it actually producing? So normally what happens this is what happens in the energy sector, in all sectors, right? If you see a sector starting to break out, what happens is it goes to the big boys first, the large market caps. It's just like the altcoin season, right? The market cap, Bitcoin, Ethereum, then you go to your largest, then your mids, then your smalls, then your nanos, okay? So with Beetaloo Energy, this could be faffing around for a while, okay? I would say it's not until you get through here that you've got to say, we're onwards and upwards. So it's at least got to get through that 35-cent mark first, and you can spend a lot of time just effing around in here, okay? When you start doing that, yeah, cool. No problem. That could be the start of the next leg, but this is just a whole bunch of chop, and I would highly suggest to you, whoever it was, don't get lost in the chop. Don't try and pick the absolute bottom of this thing, hoping that it's, buy some now if you want, and just hold it, but don't trade it. But be willing to hold it for that's on the monthly. Be willing to hold it for a long time, okay? Be willing to hold it for a while. This is the monthly, okay? So be willing to hold it for a year, longer, something like that, before it starts really doing something, okay? There might be better plays other than that, but yeah, it'll probably be, if it strikes, if it starts producing, if it turns from explorer to producer, it'll pick up in market cap, and then, I could see it going. But not something I would be getting into personally just yet. Not from a technical yet, and not from a fundamental either. Because you're just in the very beginnings of the public participation phase of energy, okay? And that's going to flow to the bigger boys. Now, XOM, someone wanted me to have a look at. Oh, ExxonMobil. Yeah. See? Speaking of flowing into the big boys, this is where it's flowing. I'm also going to show you one that someone talked about. I've forgotten who it was. May have been David Bird or someone else. That is actually a pretty good, very good leverage play, but I'll talk about that in a second. This is XOM, ExxonMobil. Yeah, you can see the similar structure, although it's just because it's an individual stock, it's like ultra, it's nearly $1 trillion company. It's $637 billion. But if XLE is breaking out, you're going to see the producers, like the big boys, outperform it. Okay, it's doing it. This is the same thing. This is now. If you want to get jiggy with it, if you want to get funky with it, what you can say is the following. Let's do some quick Elliott wave on this. I'll take it on the. Yeah. Yes. 1, 2, 3, 4, 5. I bet we get bearish divergence. What do you know we do? Cool. I'll get rid of you and you. So what can we say this is right now? 1, 2, 3, 4, 5. Bearish divergence from the 3rd to the 5th. Cool. Or if you want to say 1... No, you can't really say 1, 2, 3, 4, 5 bearish. Either or, it doesn't really matter. I would favor that. Then you get the A, B, C pullback. Now, where did we pull back to? Let's have a quick look. I'll pop it back on the linear. So from there to there. Well, interestingly, that's at the 0.236 on the logarithmic. Where did we? Okay, at the 0.618, right there. Kind of faffed around there. Cool. So pretty darn good. Pullback, so that's your wave. Fuck off. That's your wave 2 pullback. Okay, so what's this? That's wave 1, wave 2. You're now in the public participation phase of a larger move. So getting in here would have obviously been perfect. Okay, but hindsight's 2020. You're in the public participation phase now. Now there's no signs that it is ending anytime soon, because also what you're in the mini beginning of the 5-wave move here. 1, 2, you're at the start of the public participation phase of this larger move. So what that means is, I know it's all really squiggly, sorry. What that probably means is you've got there to go, and then that becomes the 3 of the larger wave move. Then you'll have a pullback, and then you've got the full-on excess phase to go of the larger cycle as well. And that takes you out to, geez, what's that, like 2040, 2045? We're talking, higher from here. Cool. That's your big boys, though. There might be ones that are smaller market caps, which have potential, higher risk but higher reward. Here's what I'm going to show you. This is Oxy. I'm not in it yet, but I'm really hawking it really, really bad. Really, really bigly. Okay. This apparently has, I'm nearly in it too, the highest large cap leverage to the oil price. So this is the large cap. It's Occidental. It's 46 billion. But that's like a hell of a lot less than ExxonMobil. Okay, ExxonMobil is like 630 billion. This is 45 billion. It's still very large, but look at this. Apparently has the largest. So I'm hearing, I think it was David or maybe Craig Dixon, one of them at Mastering the Markets educators over there, said it has the highest large cap leverage, meaning if energy is going to continue and, the large caps are going to go, this one tends to go really well. It's the best risk to reward. So what did we notice here? Geez, I'm really almost about to pull the pin on this one, as in get into it, not get out of it. So what we have here is your move all the way back down. Let me go on the logarithmic, and you can see here. That's your 1, 2, 3, 4, 5. That's your 1, 2, 3, 4. Really short, really short 5th wave. Okay, so that's that. That's your A, B, C. That's a really, really deep correction, and right down into the 786. This looks like at this stage, that's your 1. That's your 2. Where did we find exact, and I mean exact support at? right there at the 0.786 at that window that we talk about, okay, the zag zone. That's perfect. Now what we're looking for is a bullish change of market structure on the time frames. Do we have that on the monthly? Not yet, but we're almost there. So I would suggest if you do the following, and the volume has to confirm it, okay, and I'm going to pop it in right here just for me too. If we cross up on here, I'll put that alert in. That would be a bullish change of market structure on the monthly time frame, where then you're finally making successive higher lows and higher highs. Would be looking very good, okay? And I would suggest that that's probably the beginning of the wave 3 move, which will break the all-time high, head up here, not all-time high, break that high for sure. That's your 1, that's your 2, that's your 3. Then you're going into your larger move. So that would be really good. If you want to be really degen, then you'd be wanting to look at it on the smaller term time frames. Have we broken on the weekly time frame? And we have not just yet. We haven't broken market structure bullish on the weekly just yet. We're not making, actually, you could probably even say we did it on the weekly. Did we do it on the daily? Well, we certainly did it on the daily, okay? So on the weekly and the monthly, in particular, watch out for there. At $49 roughly, 49, call it 50 even if you really want to. You break there, that's looking really good. Now you want the volume to confirm it as well, because if the volume's not confirming it, then you've got some problems. Okay, so it means that everyone's sort of piling. It looks like people are piling in, but the volume's not confirming. So you've always got to have volume confirming. Can I say the phrase volume confirming anymore? So if you do the following, on the monthly, if you break through here and then that also breaks here, okay, that needs to go in confluence. That needs to do that. If you do that and you close the month above there and that's closed above there, go time for Occidental Petroleum Corporation. Cool. I'm really watching this one and I'm pretty keen to get in. I probably should have gotten in here. Would have been the best option, right? Probably there. And look what we've done on the daily is we've come out and we've retested and we're going onwards and upwards. We'll see. Maybe we reject here and come back down. And if we do something like that, oh man, I'm so in like Flynn on Oxy. Cool. I got to go. And so do you. You got stuff to do. This is all moving around. Final comments and we'll get out of here. Thanks. You're very welcome. I don't have time anymore. I'm so sorry. Tony Ernham, can you comment on liquidity of ETFs, please? I can't. No, I'm running over time. I've got my work to get to. I've got breakfast to eat as well. How's the chart of BMC? Sorry, I can't do any more chart requests. I apologize. I've been going way over time. But what I will do, I go live on Tuesdays. I go live on Thursdays as well, and everything in between. And if you really want me to see something, I know it sounds a little bit like give me money, but if you do a super chat, that gives you preference. Don't do it now because I don't have time, but super chats always give preference for chart requests if I don't, if I get one. Okay, so that's a way to, I think you can do a super chat for like $2 or something. Give me $1,000. That'd be great. That is it. I've talked about everything I need to talk about and I have to get out of here. Thanks so much, Joe. You're welcome, Daz Stone, my friend. Good to see you watching live. You've watched Good Morning Stackers with me, Joe Main. Talked about silver, talked about how tech stocks are absolutely cooked. Did some energy stuff as well. Ultra bullish on energy. We do a final synchronized slurp and we also dance it out at the end. I know, it's like you get everything here. It's like a smorgasbord of fun. Because, ladies and gentlemen, grab your tasty beverages. You have watched
Good morning, Stackers.
Oh yeah, we're feeling fine.
Good morning, Stackers.
It's podcast time.
Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do the
Synchronized slurp. Now we're on the move.
3, 2, 1, go.
Good morning, Stackers.
Oh yeah.
Man, I gotta go. Love your work, people. Stay safe, stay informed, keep stacking. Whatever you are stacking, I'll speak to you soon. Have a great day.